Greetings, members one and all of the Salivation Nation. The markets are doing their thing today. Interesting to see. Sort of an inverse reaction from yesterday. Gold is going up and silver is going down just a little bit there. So gold is a clear winner today. Platinum has fallen as well. Palladium, though, has jumped up. And between the PGMs, palladium is up quite a bit, $18 there. Over 1% increase. But that is kind of fascinating to see where the markets are moving. Gold making its move up. Some people had predicted that it would stay relatively stable, but it is moving upwards, and it could unexpectedly just shoot up with all that's going on in the world. Who knows? I think people tend to look at gold as that ultimate safe haven, and silver is a speculative play for the time being into the markets. And I think we're waiting for that time when silver is seen as the second cousin or the little brother of a safe haven to gold. I don't think we're quite there yet. And that's just my own personal opinion, although I have seen it as a safe haven, as a hedge against economic instability, as money, as most of us do here. But we have to be patient with silver and see how this plays out. It really hasn't dropped that much. But the point of this video is to make a case against gold. Yeah, so where the markets are moving, I wanted to show that first to talk about this from investment news. I like to kind of poke around a little bit and see what the other side is saying. There are some people who really don't like gold as an investment, or of course I don't like it as an investment either. I like it as a hedge. But I think some of these people just don't understand the fundamentals. And most times when you see opinion pieces such as this, when they make their case, they make a better argument for it than against it, as well. I think we'll find in this particular piece here. Some advisors shun the precious metal, arguing that it's simply a trading vehicle. Well, good grief. I mean, a trading vehicle is what money is, too. I mean, what currency is. Currency is a trading vehicle as well. And I think that's really the first argument for it than against it, in my opinion, because it's the ultimate form of money. The case against gold. Just the headline alone kind of makes you shake your head here. With the price of gold up nearly 18% since the start of the year, some market watchers are calling it a crowded trade. That's just one of the reasons some financial advisors give for steering clear of the precious metal at this point in the market cycle. Well, it's interesting. I think its rise up this year makes a better case for it than against it. But I kind of see what they're saying there. He said gold is a little overbought and everybody is asking about it. And if there's a consensus out there, it's best to bet the other way, said Dennis Nolte, Vice President of Seacoast Investment Services. Now look at the name of his company here, Seacoast Investment Services. You're looking at anything out there where the price goes up with something, well, it's time to back off and buying it. The fear of missing out. In other words, don't give in to fear of missing out. And that's true if you're looking at it as an investment. This is case in point of why I don't like to look at gold as an investment, because then you're affected by things of FOMO, fear of missing out, or what have you. If anything, when it comes to precious metals, we had to hodl them, hold on for dear life for the metals during these times, because some people will be tempted to sell to try to profit from it, but that's not really why we should hold gold, in my opinion. He goes on to say that you just don't want to buy something when everybody else's eyes are on it. Well, but that's not the case with gold, because I'm telling you, if everybody else's eyes were on it, it would be a lot more than it is now, in my opinion. In juxtaposition to the so-called gold bugs, who tend to be persistently enthusiastic about the prospects for gold, some financial advisors view gold as, at best, a trading vehicle. I kind of don't understand where that terminology comes from, but yeah, I mean, it is the ultimate form of money, and it is traded. Obviously, exchange traded funds are one way that can be done, but I mean, there's trading vehicles. There's a lot of trading vehicles out there, so I'm not really sure what they're going on with regards to that. And as far as us gold bugs who are persistently or perpetually enthusiastic about the prospects for gold, yes, we always are. And when gold goes down, we look at it as it's on sale. In other words, it is a prime opportunity to purchase it, or to even continue to hold it, because we understand that when gold is low in price, that means that everything else is humming along okay in the economy. It's only when the price goes up when people are fearful about what's either happening or going to happen in the markets. And I think that's lost on some of these financial advisors out there. Tim Holdsworth, who's the president of AHP Financial Services, says, "We use bonds to temper down volatility, not gold. I don't speculate, so I don't buy gold. I would only be interested in gold if I thought the markets were going to crash. And that's not the case." Well, look at the bond markets. There's an everything bubble out there. You've heard people talk about that. I know Mike Maloney is one, and others have talked about an everything bubble. And I think there's some truth to some of that. And that includes the bond market. And look, we see this, how the bond market's been reacting as of late, the yield inversion curves and all. So what does that tell you? And now, obviously, he's saying he would only be interested in gold if he thought the markets were going to crash. Well, good grief. People have been predicting a crash in the markets for quite some time. No one knows, because a lot of times it happens before we even know it. I believe it should be there as an insurance policy, not for just... That's why I don't think we should be operating out of fear when we purchase gold. For Tim Dorman, founder of Eagle Ridge Wealth Advisors, the biggest problem with gold is in valuing it as an investment. I actually agree with that. Right. We should not look at gold as an investment. That's the big problem. That is the biggest problem. In fact, that's a problem even in the gold bug community. People look at it as an investment. There's really no way to value gold. There's where he's wrong. There is a way to value gold. And that is holding on to it and understanding the history of it, its intrinsic value. And if you can wrap your head around that and look at the history of gold as money for millennia, well, that's a very good way to value gold. You should not value gold based off of the dollar amount, off of fiat currencies. That's where there's really no way to value gold. He goes on to say that it doesn't produce anything the way a company can produce cash flow, earnings, or dividends. He's exactly right there. It does not produce anything the way a company can produce cash flow. It doesn't pay dividends. It's been a store of value for thousands of years, but that value has just bounced around. Well, that's where he's wrong. He's right that it has been a store of value for thousands of years. It's not that its value has bounced around. What's bounced around is the value of the currencies that attempt to measure it. And that's the problem. He's looking at it from the wrong lens. He's looking at it from the lens of fiat currencies. And by the way, just so you again understand that I'm not knocking fiat currencies. We need them. That is currency today. Some have more value than others. But one thing's for sure, at least here in the United States, we have a Federal Reserve System that targets the depreciation of the dollar every year at 2%. So doesn't that tell you something? So that's why we hold gold. This year, the price of an ounce of gold has been as low as $1,270 and as high as $1,542. And actually right now, it's $1,532, which is just above where it is currently trading. Last year was a relatively mundane year for the price of gold, which ended 2018 down 1.2%. There have been big swings in recent years, and each one typically triggers a debate about the value of investing in gold. And I will say that, given what we've seen here, multiply that by a factor, a percentage to silver, because there are some gold bugs who don't understand silver in the same way this guy doesn't understand gold. I think this is a lesson not only for those of us who understand gold and accumulate it, but I think it transcends down to silver as well, because silver is money as well. It is more volatile than gold, but it also has thousands of years of history behind it as money. Gold gained 12.6% in 2017, lost 27.8% in 2013, gained nearly 28% in both 2009 and 2010, spiked 31.6% and then run up to the recession in 2007. Some people think gold is a secure thing, and they usually want to turn to it in inflationary and recessionary periods, Mr. Dorman said. But people have been calling for a recession since the last recession. That's true, too. And if you have no idea what the market is going to do, and you can't value commodities like gold, how will you know when to invest in them? Well, that's right. That's why you should never purchase these types of things out of fear, especially things that should not be looked at as an investment in the first place. Ever, ever, ever. The metal itself is not an investment. It is a way to protect yourself. It is an insurance policy. That's why the prices go up and down. You think about it. If you had an auto insurance policy, and you get in a wreck that's your fault, well, your rates are going to go up. Then you go through some time, and it goes back. Then rates will go back down again once your driving record improves, or you get a bunch of tickets. In some states they offer a point system with your tickets, and you get plus points if your driving record is as such, and your insurance rates will go down. It's going to be cheap if you got a good driving record. It's going to be a lot more expensive if your driving record is poor. While gold has a reputation as a hedge against inflation, so do Treasury inflated protected securities. Inflation protection securities, which would be Mr. Dorman's preference to his clients. Well, yes, there may be some truth to that. Treasury inflation protection securities, I don't know a whole lot about. Is that the bond market? Look where that's going these days. I don't know that I'd trust government and anything that can be traced in that way. If he's admitting that gold has a reputation as a hedge against inflation, as do Treasury inflation protected securities, why not just get the gold? That's out of the control of the government. As a commodity, the article goes on, gold is unique in that, unlike most commodities that are used up, gold is virtually perpetual. Once it's mined, whether stored as bullion or used to make jewelry, it doesn't ever go away or expire. That's true. And by the way, tell that to some of the silver bugs out there, because silver is also perpetual as well. But while gold might last forever, the tailwind behind its price does not, said Paul Schatz, president of Heritage Capital. Again, we've already covered that, because it will, the price can go down in good economic times. Gold typically has long super cycles and a terribly long-term track record to buy and hold, and it doesn't produce earnings or pay dividends, which we've covered that before. Gold is not a great hedge against inflation because it typically rallies long before the inflation appears and declines long after inflation ends. Well, I don't know what data he's looking at, but there are charts that show that gold definitely does provide that great hedge, and it definitely is a wealth preserver against economic instability, and also it performs very well in comparison to inflation-adjusted dollars. Mr. Schatz says that while he isn't anti-gold, although it sounds like he is, he doesn't believe in leaving a gold allocation in a portfolio as a long-term position. Gold is best used as a trading vehicle or strategic or tactical holding. He said, I would never permanently allocate to just owning a gold fund or the physical metal. Well, very interesting point. He certainly, obviously, is not a fan of gold, and because I would, and I'm not a financial advisor, but I think the worst thing to do is to use it just as a trading vehicle or strategic or tactical holding. It is best to have it for the long term. In the long term, you're going to see much better performance of it, because you think about it, until you sell it, you're not taking a loss on it. just as the same thing with silver as well too. You hold it in your hand, you weather the storms, and you're not using it to hedge against this or that. You're doing it. The only thing you're hedging it for is against economic instability or just the natural depreciation of the dollar. So there you have it. Post your thoughts below. I thought this was quite interesting. Gold. It is the metal of the that I believe shines throughout, and will continue to do what it does despite people being against it or what they say about it. Its history and its track record is beyond repute, in my opinion. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment below, click that little bell, and finally, subscribe.